All right, if you're thinking about private equity as a possible career, you're probably wondering what positions are available and what salary or total comp you could make in each of those positions. In this video, we're going to talk about private equity compensation and how much you can make if you work in private equity as an analyst, as a VP, as a principal, as a partner, as a managing director. So stay to the end and I'll provide a tip on how to really accelerate through those levels so you can really maximize your earning potential in private equity. All right, so first of all, we got to understand what private equity is. Now, when I'm talking about private equity, I'm referring to leveraged buyout private equity. Now, private equity generally could refer to any equity investing in private companies. So venture capital falls in this, angel investing falls in this, distressed asset fall in this, even theoretically real estate, different types of real estate transactions could fall in this. For this video, we're going to talk about leveraged buyout private equity. Now, these are funds that are going out and they're buying whole companies and they're using debt leverage to acquire those businesses. So maybe, I go out, I find a business that's generating, like $20 million of cash flow every year. And I'm going to buy that business for a couple $100 million, and I'm going to use maybe $100 million of it of debt to buy the business. So I put $50 million of capital in from my fund, and then I borrow $50 million from the bank. So let's just work through what that would look like. So if we have our company, right, day one, we go in and we buy them. We're using 50% equity and 50% debt. Now, this is important because you'll see how this ultimately flows into how private equity investors get paid. Now, over time, this business is generating, let's say we bought it for $200 million. So this would be $100 million in debt that we borrowed and $100 million from our fund that we invested. Now, what's going to happen is over time, let's say this business is generating, like I said earlier, $20 million in cash every year. Well, if I do nothing and I don't help the business grow, I don't improve margins, I don't do any of those things that private equity investors use to help companies perform better, all I do is I just leave it and it just keeps generating this $20 million in cash. Then what's going to happen is I'm going to use this $20 million to pay off the debt. And so by the time I get to year 5, right? So year 1, year 2, we look at this and we look at my ownership structure. Well, in this case, I've paid off $20 million of that debt. So now only 40% of the company is financed with debt. The rest is equity, right? And then year 3 and year 4. And then by the time I get to year 5, I have paid off all of this debt. So at that point, I own this company outright, 100% equity. And if I did nothing else, right, I put in $100 million, and if I sold it for the same price I bought it for, then that same $200 million, then I would generate a 2x on my investment, right? I put in $100 million, I sell it for $200 million, I own 100% of it, so I doubled my money in 5 years, okay? Pretty basic stuff. Now, if you look at, you've got some levers, right? So maybe you borrow more debt, or maybe you improve cash flows. There are a bunch of things that you can do to improve the business. But during that time period, I made 2x. So let's dive into how this fits with private equity compensation. Private equity investors get compensated in a few different ways. One, they get what are called management fees. Now, management fees are paid by the investors to the private equity investors, the GPs, the general partners of the fund. And typically, they're getting paid 2% management fees. Now, there are some funds, some of the very big, very well-known funds that charge upwards of 3%, but 2% is pretty much the industry standard. The other way they make money is on carry. Now, carry is a performance fee that's paid based on the profits of the fund. So industry standard, again, is 20%, but there are some funds that will charge upwards of 30%. Then the other way that private equity investors sometimes make additional fee is they will charge fees to the company. these fees could be charged to the portfolio company as a form of consulting fees or additional management fees, or private equity investors will sit on the board and they'll charge a fee for service there. So sometimes you'll see this as well, although this is kind of a controversial fee, and so sometimes LPs push back on it. So we're not going to spend a lot of time talking about it. Just know that it's an additional way that private equity investors make money. But if we just focus on these two, let's say your typical fund is a $2 billion fund. Now, I think there are definitely funds that are smaller than that. There are definitely funds like Bain Capital and Apollo and others that are much, much, much bigger. But I would say your typical middle market private equity fund is around $2 billion fund. You're charging 2% management fee. That means that every year you've got $40 million of fee coming in. Then if you look at carry, well, if I take this $2 billion fund and I double it, then that means that I've got $2 billion of profit, right? Because I got to pay back the original investment to my investors. But $2 billion of profit just doubling the fund. So $2 billion worth of profit, I get 20% of that. That's going to be $400 million of carry. And this is our management fee per year. So over the course of a 10-year fund, right, this management fee could come out to as much as $400 million paid in management fee. If I 3x the fund, which a lot of funds really target, they target about a 3x return, then that means there's going to be $4 billion in profit. And so that could be upwards of $800 million. So you've got $800 million plus that $400 million. So based on these numbers, a $2 billion private equity fund could earn in total across all fees and carry somewhere between $800 million and $1.2 billion. All right, so that's the simple math there. How does our $800 million to $1.2 billion get spread out across the different people at the private equity firm? So your typical fund is going to have managing directors or managing partners. You also have directors, but more often they're called partners within a fund. These are kind of like the junior partners. You'll have principals, you'll have VPs, you'll have associates, and you'll have analysts. All right, so let's talk about general comp for each of these. Now, so these roles tend to be your pre-MBA roles, and these tend to be post-MBA. Also, post-MBA type roles are what I also call your partner track roles. So particularly principals and VPs. Once VPs and principals typically are on that pathway to eventually make it to partner if they're able to perform. So let's talk about the different salaries that you can earn. So I found this great report from Hendrick and Struggles. They do a lot of different services for the private equity industry. They've got a great compensation report. And, the numbers fall in line with what I've seen in other places. So analysts and associates, they're going to make about $200,000. They're not going to get any carry, typically. That's just salary. Then your VPs, they're going to make somewhere around $300K per year. Principals, $450K per year. Directors and partners are probably going to make somewhere between $800 to $1 million per year. And your managing directors are going to make somewhere between $1 and $3 million per year. So clearly, like, a lot of money flows to the top. Now, the other thing, so this is just your salary plus bonus. But then you also have carry. Now, the reality is the lion's share of the carry is going to go to the managing directors, managing partners, directors, partners. And let's say that the fund generates $400 million in carry. The vast majority of this is going to go to these individuals. So if you've got, typical firm probably of a $2 billion fund probably has somewhere between, call it 3 to 6 of these individuals. So your average payout is going to be somewhere around 60 to 70 million dollars in carry for those different people. Now, if you're a managing partner or managing director, that could be a lot higher. Maybe you're closer to 120 million dollars. If you're a junior partner, maybe it's lower. Maybe it's like 40 or 50 million dollars. But that's the general there. And then principals and VPs, they may make somewhere between 1 and 10 million, depending on level of seniority and so forth. And then associates, if they're lucky, they may make like 100K. If they have any carry at all. So probably 0 to 100K. All right, so what does this mean for you if you want to work in private equity? Well, okay, so the money is made at the top, right? You want to get to where the managing directors are. So there are 2 ways to do that. One, you either work really hard and rise through the ranks over time. You become an amazing deal maker, right? You're going out and you're finding some of the very best deals for the firm and generating some really, really great returns. And such that the senior people say, this individual is adding more to the pot than they're taking from it. We want to keep them. Let's keep giving them more because they're putting more in our pocket, right? So that's one way. The other way is go start your own private equity fund. And that's what you see a lot of people do. They rise to the ranks to a point where they kind of hit that glass ceiling, and the managing director at that firm isn't interested in giving up more of their compensation. And so that person takes all of their experience, their networks, their know-how, starts their own firm. Now that can be tough because you go from making a lot of money at that firm with a very safe, secure job to basically starting your own company. But that risk is what you ultimately get compensated for if you're successful, and why the original MD was making so much. So if I got you really excited about private equity and how much you could make there, check out my other video where we talk about what it's actually like to work in the area of private equity.